Hello traders. Welcome to today's Pairs of the Day update. Let's take a look at the latest movements and key factors affecting the Japanese yen, JPY, US dollar, USD, and gold, XAU. Japan's CPI inflation continued its upward trend in July, with the National Consumer Price Index, CPI, rising to 2.8% year-over-year. This increase has fueled expectations of another rate hike from the Bank of Japan, lending strength to the Japanese yen. As inflationary pressures persist, market participants are closely watching how the BOJ will respond, especially considering the growing calls for tighter monetary policy. The Japanese yen gained further support following hawkish remarks from Bank of Japan Governor Kazuo Ueda. Speaking on Friday, Ueda indicated that the Japanese economy is progressing as expected, aligning with the central bank's price targets. He also suggested that if economic conditions continue on this path, the BOJ may adjust its policy accordingly. This stance has bolstered the yen, particularly as core inflation, excluding fresh food and energy, dropped to its lowest level since September 2022. The US dollar faces mounting pressure as markets increasingly expect the Federal Reserve to initiate a rate cut at its upcoming September meeting. Minutes from the latest Fed meeting revealed that the majority of members are in favor of easing policy, provided economic data supports such a move. As investors weigh the likelihood of a rate cut, the greenback has struggled to maintain its footing, particularly ahead of Federal Reserve Chair Jerome Powell's upcoming speech at the Jackson Hole Symposium. The US dollar remains in a precarious position due to mixed economic signals. On one hand, higher-than-expected jobless claims indicate some softness in the labor market. On the other hand, business activity has remained robust, even as the manufacturing sector faces its second consecutive month of contraction. These conflicting data points have left the USD vulnerable as traders await further guidance from Fed Chair Jerome Powell, whose speech at the Jackson Hole Symposium is expected to provide insights into the future direction of US monetary policy. Gold prices have retreated from a record high of $2,531 as rising US Treasury yields have bolstered the US dollar, weighing on the value of the non-yielding metal. After a strong run that saw gold reach new all-time highs, the upward momentum has stalled, with XAU/USD slipping below the previous record level of $2,483. The increase in US bond yields, particularly the 10-year note, has been a significant factor in this decline, as higher yields make holding gold less attractive to investors. Despite hints from the Federal Reserve's latest meeting minutes that a rate cut could be on the horizon, gold prices have dipped in recent sessions. The metal's decline comes as stronger US bond yields and a rising US dollar have outweighed the potential bullish impact of a dovish Federal. While Fed officials, including Boston Fed President Susan Collins, have suggested that rate cuts may be appropriate soon, the non-yielding metal has struggled to maintain its upward trajectory, especially with the greenback gaining strength. Investors are now focused on Fed Chair Jerome Powell's speech at Jackson Hole, which could set the tone for gold's direction in the coming months. Now, let's move on to the technical analysis and check out the charts. We have opened the 4-hour chart of US dollar to Japanese yen. The price is currently moving around the 20-period moving average. The stochastic indicators are crossing lower near the overbought area, suggesting a potential downward movement. For support and resistance levels, we have identified 144.02 and 142.72 as support, with resistance levels at 146.62 and 147.90. If the price moves lower, it may find support around 144.02 and potentially extend down to 142.72. On the upside, resistance could be encountered near 146.62 or potentially extend towards 147.90. Now, let's switch to the 4-hour chart of gold, XAU/USD. The price is currently trading below the 20-period moving average. The stochastic indicators are crossing higher near the oversold area, indicating a potential upward movement. For support and resistance levels, we have identified 2,473.13 and 2,451.47 as support, with resistance levels at 2,507.74 and 2,529.64. If the price moves higher, it may encounter resistance near 2,507.74 or potentially extend towards 2,529.64. On the downside, Any declines could find support around 2,473.13 or potentially extend down to 2,451.47. Always remember to consider your risk management strategy before entering any trades. That's it for today's update. See you in the next video.